If you've been following the crypto space at all, you've definitely heard of Ethereum. It's the second largest cryptocurrency in the world after Bitcoin, but a lot of people don't really understand what makes Ethereum different. Why people invest in it, or whether it's actually worth considering as part of your investment strategy. So today, we're going to cover all of that in a way that actually makes sense, even if you're completely new to crypto. Let's start with the basics. Ethereum is not just a digital currency. Yes, it has a coin called Ether, often referred to as ETH, but Ethereum itself is actually a platform. Think of it like this. If Bitcoin is digital gold, Ethereum is more like a digital computer. It's a programmable blockchain that allows developers to build applications directly on top of it. These applications are called decentralized apps, or apps, and the technology behind them has the potential to reshape entire industries. The key innovation that Ethereum introduced is something called smart contracts. A smart contract is essentially a self-executing agreement written in code. When certain conditions are met, the contract automatically executes without needing any middleman, no lawyer, no bank, no third party. Imagine buying a house and the ownership automatically transfers the moment payment is confirmed, without any paperwork or intermediaries. That's the kind of possibility smart contracts open up, and Ethereum is the foundation that makes all of this possible. Now you might be wondering, why does this matter for investing? It matters because Ethereum isn't just speculative. It has real, active use cases right now. Decentralized finance, known as DeFi, is built largely on Ethereum. This allows people to lend, borrow, and earn interest on their crypto without using a traditional bank. NFTs, which became a massive cultural moment, were also primarily built on Ethereum. And as more developers build more applications on the platform, demand for ETH naturally increases. Let's talk about what actually drives Ethereum's price. Unlike Bitcoin, which is valued primarily as a scarce store of value, Ethereum's value is closely tied to the activity happening on its network. Every transaction, every smart contract execution, every dApp interaction requires a fee paid in ETH. These fees are called gas fees. The more the network is used, the more demand there is for ETH. So in many ways, investing in Ethereum is like investing in the growth of an entire digital ecosystem. In 2022, Ethereum went through a major upgrade called the merge. This transitioned Ethereum from a proof-of-work system, similar to Bitcoin mining, to a proof-of-stake system. This change dramatically reduced Ethereum's energy consumption and also introduced a mechanism where a portion of ETH gets burned with every transaction. Less new supply being created plus ETH being regularly removed from circulation creates a deflationary pressure that many investors see as very positive for long-term price growth. So how should a beginner actually approach investing in Ethereum? First, start small. Don't put in more than you're genuinely comfortable losing. Crypto is still a volatile and relatively young asset class. Even Ethereum, despite its strong fundamentals, can drop significantly in price during broader market downturns. A position of 5 to 10% of your overall investment portfolio is a reasonable starting point for most people. Dollar cost averaging works really well with Ethereum. Instead of trying to time the market perfectly, invest a fixed amount every month regardless of the price. This smooths out the volatility over time and removes the stress of trying to buy at exactly the right moment. Consistency matters far more than timing when it comes to long-term crypto investing. Use reputable exchanges to buy ETH. Platforms like Coinbase, Kraken, or Binance are widely used and trusted. And just like with Bitcoin, consider moving your Ethereum to a hardware wallet if you're holding a significant amount. Keeping your crypto on an exchange means you don't truly own it until it's in your own wallet. The phrase in the crypto world is, not your keys, not your coins. Ethereum has real technology, real developers, real applications, and a real and growing community behind it. That doesn't guarantee future returns, nothing does. But it does mean Ethereum is one of the most serious and credible projects in the entire crypto space. Approach it with patience, discipline, and realistic expectations, and it can be a genuinely interesting part of a diversified investment strategy. If this video helped you understand Ethereum better, please subscribe to the channel. We break down crypto, investing, and money topics every week in plain and simple language. Hit that subscribe button and I'll see you in the next one.